All right. Well, thanks for coming on the show today. Yeah, I
Thanks for
appreciate you
having
being on here. I've known you for a while now. Actually, been pretty cool to have met you through in real life, I guess, before online. So I always
me. Yeah.
appreciate those kind of relationships. But yeah, I mean, obviously lately here, it's pretty cool to see how you've been diving into the Hyperliquid ecosystem as well. I mean, I even see Hyper in the background. Yep.
Yeah.
Yeah. Oh,
Collected a
and
few
Pip too.
times.
Yeah, nice. Yeah, I mean, seeing how things have expanded on Hyperliquid. I mean, we were all pretty bullish to begin with, but man, this is really like taking off. Seeing it, go so many different places with like HIP3 and everything too. That's I think that's been a huge unlock for like regular people too, right?
Oh, absolutely. I mean, with hip free, I think that's really the first time where we've seen this technology really bridge the gap with traditional finance people, actually seeing the value of on-chain transparency.
Yeah, I guess because before people aren't looking at things on chain or being able to see like where orders are or any of that stuff. It's all just very opaque, right?
Yeah, every exchange is like a black box to most people. You see the market data and you can see things live, but you don't really understand how it works behind the scene, and that for a lot of people creates a lack of trust.
Oh yeah, big time, big time. I mean, and especially here where we're even the things that we look at on chain that are like a little bit, or I shouldn't even say on chain, but within crypto that are like a little bit shadier. We're always like, well, where's the transparency? Even understanding like how the engines work and whatnot too, right?
Yeah, for a lot of exchanges and even for previous iterations of decentralized exchanges, some of the execution, some of the ways it was working, that was also not happening transparently. And so Hyperliquid got that right, and they're not the first to necessarily try to do that, but they did it without the latency and without the fees that kind of made it hard for people to actually trade.
Right, right. Yeah. I don't know. Did you ever play around with like DYDX in the early days?
I did. I had a few friends that were really big in using that, and they got the airdrop, and they were really bullish on it.
Yeah.
And for whatever reason, it didn't quite mature into what we thought it might be, but that paved the way for future platforms to really
Yeah, I
fix the
feel
problem.
like that one was the one that kind of caught the most attention. There's a few places that had tried it before and just wasn't quite it. With DUIDX, I feel like that was an early one that people were pretty excited about. But also GMX, right? That came into play.
Yeah, DMX, there was another one, began with an A. I can't remember. That was the one I tried to get in early on. But as with anything, you can fork an idea, you can fork a UI. But if you're forking the problems that came with it or not improving on them, that's really not where we're taking the space forward. And I think the other thing with trading platforms is it's very difficult to acquire and maintain liquidity, especially on a diverse set of markets. And so somehow that is how Hyperliquid managed to succeed here, where perhaps previous platforms failed.
Yeah, the liquidity aspect is so underrated, or I shouldn't say underrated, but just like overlooked from an outsider perspective. Like that's where I remember thinking, even with DOIDX, like they were incentivizing liquidity through their token, right? And saying, okay, and when I saw like each epoch you could get this, and I was like, wait, this is going to be running for this is like a liquidity program for, you know, years. I think it was like a 2 year program or something. I'm like, how does this not just go to zero, right? And so that kind of feedback doesn't work. That feedback loop didn't work. So
Yeah, there needs to be sustainable incentives and sustainable tokenomics. Otherwise, the trend won't be positive, and value needs to accrue to the token, so that token holders see that growth and continue to maintain faith in the token. Because if not, that can be quite damaging to a platform. And you've seen that with DYDX's token. You've seen that with other platforms' tokens. And I think that's something that Binance did do well is they did manage to drive value back into the BNB token. And it's almost similar things that Hyperliquid has done over time. They've used the token as a platform utility token, as a burnable form of value that is accrued back into the holder base, and then as the kind of the ecosystem token around Hyper EVM and that kind of platform for developers. And so I think that is really where they've leveraged that to the right. They've used that to lever growth in the right way.
yeah. Yeah, I guess like a lot of us don't really pay attention to be like the BNB token anymore. I mean, it's still what number 4 or 5 on the list here or wherever, and I just remember hearing like the tokenomics were the real unlock for it.
It is, and they have a lot of revenue flowing through, and so they can direct that in ways that help boost and maintain the price. And that's just the powers that Binance has. But it has done well at accruing value, and so the prices continue to go up. I mean, it was when I first worked at Binance, it was 10 times as low as it is today, and so you've seen something similar with Hyperliquid. And it's really nothing more than just building products that people use and continuing to drive value towards the token and not just towards the shareholders. Although, of course, the founders of these projects tend to own a large share, and so it also matters what they do with their share of that.
Right, right. Do you see? Yeah, I guess there's a lot of correlation between, I guess, what was happening, or what I guess for things that you see from Binance and how Hyperliquid work. Like, I guess from the inner workings. I mean, yeah, share as much as you can here. I guess of like what you're seeing and how there's any correlations or differences.
I think similarities in what is has been built, but complete differences in values in the way that it should be built. I think that Binance is more of a traditional company. They have their internal goals and they work extremely hard towards those. That's why they've been successful. Whereas Hyperliquid, it actually formed from a very small core team, but spawned a huge ecosystem of talented builders around it. People like ourselves who've been attracted to those values to come and work at driving towards the goals that are shared among quite a diverse spectrum of people. And that helps to bring competition internally between the different projects that are building that help in the end drive us towards the best outcome through experimentation. And so I do think that that is more the ethos that I aligned with, and is actually part of the reason I jumped from working at Binance to wanting to work in the Hyperliquid ecosystem. Because it's something that I haven't seen really take fruition since some of the earlier days of Ethereum
Mm.
in the deep. Yeah.
Yeah, that's really cool to hear you kind of break that all down and put that out into the differentiations and what we're seeing. And again, like the Hyperliquid user base, let's call it, not even like the holder base now, but like which is a lot correlation there. But that user base is just is a very very different and very diverse.
Yeah, I think Hyperliquid is gradually and faster now becoming more of a financial platform than just an exchange. So anyone can use it. They don't necessarily need to know that it's being powered by technology that runs on Hyperliquid.
Right, it's the
Yeah.
house of all finance.
Yeah, and that's a tagline, but I also think that's a vision that is realistic. I mean, we can debate what all means. It could encompass quite a lot, but more and more aspects of finance will be housed on a platform that is uh, like Hyperliquid, and I think Hyperliquid has the best chance of doing
Yeah, yeah, amazing. I agree as well.
it.
So, as we were talking about kind of your early days of Ethereum and whatnot, um, I guess, what was kind of your like aha moment for crypto? Like, where was there a moment where you were like, okay, there's something here?
Yeah, I think I first found out about crypto and got into it during 2018. So that was after the ICO boom and bust. That was while I was living in Shanghai, and I ended up joining a crypto company and really learning about the inner workings of Ethereum, how exchanges work across crypto, and all of that very quickly. And I think the aha moment for me was in attending some of the lectures there. I think Vitalik came and did a speech there. Some of the Gavin Wood, early Ethereum founder, but also founded Polkadot. And so just being in that space and talking to people about the ideas, the dreams that you could build with this technology was where I found my interest, because I've always been someone interested in building, dreaming what could be and what could improve on the current system. And since then, it had been a fairly slow and sometimes frustrating progress towards what we see today with Hyperliquid, and to realizing that those dreams and that vision. But in all of the different iterations of ideas and projects that have been built in that process, it's been really fun to kind of be involved and to try and tinker with products, to try and play with them. Maybe you're trying to airdrop farm, or maybe you're just curious about this new thing that's come out. And so it feels like a space that's always had innovation and really cool people building stuff since then. And that's what's really taken me through it,
Yeah.
through the hard time.
Yeah, that's yeah. The builder path is a noble path. I agree, and you know, I think about you were previously at Binance. Obviously, we were kind of going through this before, and you know, seeing that builder process, I'm kind of curious, like what kind of challenges you run into, like inside of a centralized exchange.
Yeah. And even within, I was at Binance US for most of my time,
Right,
so focused on the US market.
right. Probably adding a
And
little layer, extra layer of complexity with all things, I would presume.
yeah, it was early days, a very fast-paced, innovative sort of rhythm to building products. And I think we were trying to mirror a lot of the successes that the global Binance team had had in building products. And so we did launch products quite fast. We were trying a lot of different things. And then with some of the headwinds of the regulatory landscape in the previous administration in the US, we we had to rein that in. And so red tape was layered on top of red tape, and bureaucracy into the process of building products, which, as you know, that doesn't help with the speed of innovation and with getting to test things out in the market. And so it became very ultra conservative, I would say, in terms of the products we would build. Um, and that wasn't necessarily as easy a place to work in. I mean, I love the people there. There's a lot of talent that we brought into that team. But I think just because of the nature of the environment we were working in the US during that time, it became difficult to really see us realizing some of those core ideas that I think I was most interested in.
Yeah, it's so crazy that, you know, as soon as you put some sort of centralized wrapper around it or some sort of, I don't know how best to explain it, but the fact that regulation becomes such a headwind when you're trying to build things within the US, just like,
Yeah.
and how much it's been driving away up until recently here, which, you know, you can argue the recent administrator, the current administration is maybe going a little too laissez-faire with things, but that regulation that just squandered innovation is such
Yeah.
a it's so defeating.
It's true. It's not just the US. You know, I joined the crypto industry in China, as I said, when I was living there, and the regulation there completely clamped down entirely on the industry. So a lot of the teams, including our team, moved out of China, and most of the users in China are essentially put into this black market area where they have to hide their activities, and there's no access to consumer apps on their app stores. That's probably the extreme end, and there are other countries a bit like that. But the US has always been a thought leader in terms of international regulation, and especially for financial markets. They care a ton about, not just money laundering, but countering terrorism financing. And so that's really where a lot of this uh, kind of the impetus from the politicians stems from. And so they don't want like to be caught with their pants down like they were during the FTX saga.
Yeah,
And
what a
that
mess
really,
that was,
yeah,
man. Oh, geez, that's
yeah,
yeah, that really put a like that really stained this entire industry. And like
it,
FTX, it worked. It was actually like a good product though, and that's where actually what caught me onto Hyperliquid was it felt like when I first started using it, I was like, oh, this is almost like what FTX used to be.
yeah. It's by and large the same product, and Hyperliquid focused on product and did a great job of it. And you would be mistaken if you just first looked at it and thought, oh, they've just built a new FTX. However, underlying it, the values of decentralization and self-custody that underpin it, that's really the real difference, right? And so if FTX was self-custodial, we wouldn't have had the problems of
Hmm.
misappropriation of funds, whether or not those funds were used for some of the best investments of the past couple
Yeah,
decades.
yeah, yeah, literally. Eh? Yeah,
They were doing, they lost some money, but they also would have made a ton of money on some of those investments. But still,
yeah.
it's not okay to do that without uh, permission of the owner of the funds.
Right, right. Yeah, and I don't know even how you would have done that or gone about it. Like, imagine you're imagine your FTX and saying, "Hey, we have access to some, some early deals. Are you comfortable with putting up half of your collateral, or whatever it was? How do you even go about providing the right framework for that,
No, I believe in the US there are certain restrictions to who has access to certain deals like that in private market. And even that is, one of the problems with the traditional financial landscape is it is very, I wouldn't say elitist, but kind of you have to you have to walk through the door before you can really get access to some of these opportunities. And so I think what Hyperliquid is doing is making it more permissionless and more transparent. And again, with self-custody, you're not at risk of someone taking your funds and doing bad things with them.
Absolutely.
As long as
Absolutely.
you're
Actually, was it Web Summit here in last week or whenever it was? I guess. Yeah, I'm losing track of time. But at Web Summit, there was a talk I went to where they were talking about pre-IPO stocks, right? And this was just after and I think it was Anthropic and OpenAI had said where these secondary markets are all are not legit. I can't remember exactly how they framed it, but they were just saying like those don't exist. Those are not real, and you don't have any claim to any stock from it. And it just created a bunch of problems for people, right? So they go on talking about how these deals that are accessible to they actually refer to them as the elite, or these Bay Area people, or Valley folk that are able to have access to these things, or corporations that have better deal flow and whatnot. And then by the time that these kind of deals or opportunities come along to retail, they're either way out the risk curve, or they're at a valuation that is like you're not getting that near that upside. And sure, there's more risk early on, but if retail is willing to take that risk, and why shouldn't that be something that's available to them? So they were going on about how that was a something that was a problem within the industry, and all I could do was just like prevent myself from just yelling out loud, Hyperliquid, because now with these pre-IPO markets, like as you look at like HIP3, okay, you want to start, people have been owning, or have had positions on Anthropic for how long now? I don't know how many, weeks or months it's been running for now, but people that have been in at, probably 4 or 5x lower than it is today. And when you look at that from a retail standpoint, I'm like, that's almost a better place for them too, because the risk, because they're liquid at that time. So yes, okay, let's say you were early. Well, as long as the pre-IPO markets are early, you can get into that. Now you're sitting in a liquid market as compared to a VC who's locked up and has vesting things, and maybe they're doing some things with OTC afterwards. But as retail, when you're like, wait, I got in at Anthropic on Hyperliquid at 200 units, and now it's 2,000 units the day after it launches. Thank you very much. I'll take my 10x, and that's have fun, and then they step away if they want, right?
Yeah, and as long as those markets are liquid and the funding doesn't drag against your position for the duration of your hold, I think that you're right. Having that liquidity and early access for retail,
Yeah.
anyone can open that trade today. I know Ventral's kind of pioneered that, and Trade XYZ have recently started to list pre-IPO markets, which indicates to me they see that this is something that will continue to be not just the trend, but a new primitive in the markets for IPOs. I think that's going to be huge. And I think there was a screenshot from, I don't know if it was the NYSE or whenever the Cerebras IPO happened, where some of the trading desk guys had Hyperliquid open because they were watching the price. And so it's becoming the price discovery venue for global IPOs, which is already one of the biggest use cases for crypto that I've seen to date.
Yeah. Yeah.
And people don't talk about that enough, I think.
Yeah.
Well, they do on our small crypto sphere, but that should be headlining.
Yeah, agreed. That's within our bubble, we definitely see that. But yeah, I think more and it is slowly leaking out, right? I mean, even more traditional outlets reporting about it, talking about it, seeing even in like what was the Wall Street Journal talking about how oil is being traded on Hyperliquid 24 or in aftermarket or after hour markets, right? So it's slowly getting there, slowly getting there. But
It is.
yeah, yeah.
And we'll see with the upcoming IPOs of Anthropic,
Mhm.
SpaceX. I think did OpenAI just submit for their IPO as well? It's coming
Maybe,
pretty soon.
yeah. I thought I saw something about that. I don't have all the details, but yeah.
They seem to be racing each other to IPO at $1 trillion valuation.
Right.
So
Yeah, it's insane.
that will be interesting. SpaceX is at like a $2.4 trillion valuation um on Hyperliquid through Trade XYZ, which is 20 to 30% higher than I think they were built to IPO at.
Yeah, I
So
thought it was like 1.75 trillion or something is what it was supposed to go out
yeah,
at. So, yeah.
so we'll see how those markets equalize if on the actual day of the IPO.
Yeah. Yeah, that's true. Yeah, that's a good point. Yeah, because if there's a premium on perps ahead of time, it may not make as much sense, or you have to like take that into consideration, I guess.
Maybe they are doing, and that would be pretty interesting. I don't know how much turnover there is in that market right now, but
Mm.
it's liquid enough to say that that price is indicative of
Of
what
what
it
it
should
should
be
be.
valued.
Yeah. Well,
Yeah.
good point. And I think, even as you're talking about with like liquidity and whatnot, like that should, in theory, there should be, you know, as more adoption comes with this, you would think that these markets only get more and more liquid, right? And there's, and especially with like the funding rate too. Like I haven't looked at that too deeply as far as like what funding rates are, but especially like in a pre-IPO, you're thinking that like it's going to, longs are going to be paying shorts for, you know, quite a bit, I would imagine, right? Especially with, potential upsides.
Yeah, with the upside potential, though, when it gets to this stage that SpaceX is at right now, you could argue that it's overvalued on Hyperliquid versus what traditional analysts thought it would be valued at, and maybe they're wrong, right?
Yeah.
Because who knows what the future value of a monopoly on space is. Probably pretty big,
Yeah,
but
that's true.
I can't tell.
That's true. Yeah, and I mean, with these kind of markets, you've been kind of looking at it, like bringing it into letting people access from mobile side of things, right, all the way back to Dexari.
Yeah.
Yeah, what were you seeing early on with like mobile use? How did that all come to fruition?
Yeah, so I was in touch with some of the early Hyperliquid contributors, and I was following Hyperliquid early on since I think probably 2023. It's when I first heard about it. Became truly a believer during 2024. I think spot markets had gone live, and I saw the potential there. I saw why it was different from its predecessors, be called DYDX, GMX, its predecessors. And I increasingly saw the challenges that centralized exchanges had, just in terms of being able to build a great product, because it is the centralizing effects and regulation that is placed on that prohibits some of these things that you see Hyperliquid able to do, solving the problems of FTX. Um, but also, it's expensive to run an exchange. You need so many people just to run something that's running on a kind of centralized stack to maintain that, and then to also run the compliance risk teams around that as well. Whereas on Hyperliquid, it's kind of operating autonomously on chain. There's a gradually decentralizing validator network that secures that, and then there are participants with different incentives structures providing different parts of the product experience. And so where we came in with Dexari is we thought we will look to try and solve some of the challenges of accessibility, and particularly on mobile, because Hyperliquid had a great web app, but it had a pretty poor mobile experience. And so we were one of the first teams to try and do that. And since then, there have been many teams that have come in and done that in different ways. We ended up trying to focus on more advanced users, and so we provided all the tools you would get on a Binance or a good centralized exchange, but in a mobile form. And so that's really where we started. And since then, we've gone in a few different um, directions, and we're now working on a more uh, kind of everyday user friendly platform. We've put that into that as well a bit.
Yeah, I mean that was pretty rad to see how you guys are, tying in here with markets, right? Markets.xyz, I guess to be exact. And obviously they are one of the larger larger groups pushing forward, I guess, I guess in a lot of ways within Hyperliquid, I guess, kind of this whole kinetic connection and everything being one of the bigger players within this. So I think this is really rad to see how you guys are kind of helping this forward facing mobile aspect of it.
Yeah, we're really excited to partner with the Kinetic team that built Markets. They have, I think, similar values as well, very aligned with the kind of vision of Hyperliquid, and they've been great to partner with. We bring our experience of building mobile apps, and they bring their experience in just kind of communicating that to the audience. They've done a fantastic job of building an audience and user base in their Kinetic product, the biggest liquid staking token on Hyperliquid. I think they just passed a billion TVL again, and so they're incredibly well trusted in this space. Also, I think they just have a great team behind them.
Yeah, I guess what has made them super trusted, or what have people seen about this? I guess just like their building history and who they are, or
Yeah, I mean they create great content too. It's likable, but I think the real thing, similar to Hyperliquid, is build good products that work, that don't break down, that when you're putting quite a lot of money behind these protocols and products, the product itself builds trust. Being transparent around what you're going to do and then doing it, that builds trust. That's just as simple as that. And then continuing to show up and be in alignment with that. If they suddenly went in a different direction, they would lose people, but they've been pretty clear about what they're going to try to do. And when things haven't worked, they've also been clear about that. But I think a lot of what they're doing is working. And so we're happy to partner with it.
yeah, okay. Yeah, the new app that I'm seeing with it is really cool with the social side of it. I'm curious how that's going to play out because we are such social creatures to begin with, and we're looking at Twitter and everything else. Like we're always looking at X and seeing what's happening there, and so I
Mhm.
think that's pretty cool that you guys are tying that into it, and then being able to like see how what people are doing and posting about their trades and whatnot too.
Yes, I think, we have become used to using social platforms in our daily lives, and a lot of those platforms can sometimes be detractive from our goals and from what we're really trying to achieve. And so if you're stuck scrolling Instagram, not really getting a lot of value out of it, why not scroll a feed where you can get useful information? I think Twitter has done a much better job with that recently. Or perhaps if you're into finance or you're into trading, learning from other traders, being able to follow them, interact with them, understand why they're making certain trades, and kind of learn from their theses. That's kind of what we're trying to do with the Markets app, and it's about, and we're not quite there yet, but moving that towards being a place of high signal and low noise, rather than a place of just noise where you don't really know how to sift through it.
Mhm. Yeah,
So
and I think the other part that's pretty cool too with this, as you're talking about signal and noise, these accounts are directly linked to their social posts, so you can actually see what they're doing and trading on chain, instead of like, hey, here was my trades that I had, and you've got some insider group behind it, and you're screenshotting and altering your screenshots for posts and stuff, and see, oh, we called it this or that, and deleting things. All of this history is like on chain, and tying that on chain activity to a social account, I think also helps build credibility, and also signal creates the signal and eliminates that noise too, because if somebody's just trading like shit and then only shows their own positive trades, well, you can kind of see through it pretty quickly when it has the on-chain tracker with it.
yeah, and sometimes you can't find them because they're purposely obscuring it, and that's what a lot of influencers in the space do, is they'll show a big portfolio of a ton of positive gains, but you don't know if we really should believe that, and often or not they are faking it. So, well, you can't rely on chain. It's there. You can go check it independently and prove that it's real if it's tied to the address of
Hmm.
that profile. Yeah.
Yeah, no, I really like that. Really like that. I'm hoping that can help clean up a bit of this industry too. There's enough grifting and kind of scamming shit that goes on that every little edge that we can take to head us towards the right direction towards transparency is better.
Yeah. You know. scamming is a profession as old as time, but
isn't it?
it's so much easier to do it from since the internet,
Yeah.
and also since crypto, because financial value can move freely and anonymously now.
Yeah, and even having those like protections, I guess, as we could look at it, where protections kind of come with a double-edged sword, right? Because like it doesn't allow you to go do the things that you want to, right? So you can't send an e-transfer for more than like $3,000 for some people, right? Like that's like, hey, if I want to actually send something, I need this capital, right? But it's there to protect you so that you only lose $3,000 for that day, right? But I do think that or I guess when you look at something like a centralized exchange or you look at centralized products versus these decentralized things, are you seeing like some protections that could actually help people, or is there some sort of, are there parts of centralized or regulatory things that could be applied to help kind of the decentralized side of things as DeFi let's call it DeFi, becomes more popular?
Possibly. I mean, regulations that exist today tend to be a very blanket measure to artificially limit financial mobility and create visibility for certain institutions such that they can combat kind of bad actors, whether those are people trying to circumvent tax laws and launder money, or to move funds to somewhere they shouldn't be to fund illicit activity. And telling your average Joe that they can't move more than $3,000 in a day because that's protecting them is probably a bit patronizing if you look at it from a vacuum, right? I mean, Tangle knows when he needs to move money for whatever purposes he needs to move money to purchase whatever he needs to purchase. And if he can't do that and he has to do small batches every day, that's just unnecessary friction, and it's not protecting him from anything. So I would like to see us as a industry and collaborating with regulators find more efficient ways to protect people and to also prevent the things that they're trying to prevent.
Yeah, because like I think about people who are, even the people that I know who is using it illicitly, right? There's maybe a handful, like not even like I know a couple of people maybe that are trying to sell OTC, and that's like the worst thing that we've got going on. I don't know, like nobody pays for it for like using it online to buy drugs like they were doing in Silk Road and all that stuff. Like nobody does that anymore. They
Yeah.
just pay with cash, especially here in Canada. Like you can basically go down the street and get what you want, right?
Yeah.
So
And I mean, yeah, the purists would argue people should be able to spend their money on what they want, right? And I tend to agree with that. And if they're buying illegal products, then they're breaking the law, and they face those consequences. But just saying you can't move money full stop. I think even in Europe there was proposed some quite egregious regulations where if you moved certain money, you have to prove that you're moving it to a certain other account and sign transactions and all sorts of friction that just makes day-to-day life impossible. And so, yeah,
yeah,
it's a blanket measure that doesn't really necessarily solve the problems it's trying to solve.
yeah, that's a good way of putting it. It doesn't solve the problems that it's trying to solve, especially yeah, like if you're trying to solve money laundering and you know, funding of terrorists, well, you should probably put an end to the U.S. dollar in cash form, right? And I know there's like moves towards that, but like that's where most of that stuff happens is with cash. Like people, and I've even heard some of these organizations didn't want crypto because you could track it on chain, and they had to go do a bunch of like, run it through a bunch of hoops or do a bunch of things in order to get the, to get it cleaned out and everything too, right? So that they could actually use it.
Yeah, it's done right. Crypto can be used to the advantage of these institutions and regulators, and can prevent crime. That's why people were, particularly privacy purists, were so fearful of CBDCs, because they would essentially replace cash and become digital cash that could be fully tracked, and that would make everything not necessarily public because it's only visible to certain parties, but that would be, I don't think that would be good either. So,
Yeah,
and
when it's not public, but it's available to certain parties, and then what happens? And what I see with that too is that what happens when that those databases get leaked, just like every other database we have,
yeah, they would definitely get
you
leaked.
know.
Or someone would get access to them.
Mhm.
It becomes a vulnerability.
Yeah,
Yeah, I think that's also something that the industry needs to work on is the right time to have privacy
yeah.
and the right time to not have privacy.
Hmm. Where do you see
Some
that?
some
Like, where do you see privacy? Privacy on and privacy off.
well, if you know an individual's wallet address and you can see that they have a certain amount of money in there, that poses a risk for that individual, right? Especially if you live in France. And so many people, um, you don't want someone to come and try and take that from you. And so just creating privacy and anonymity there, preserving that is important while interacting with a public blockchain to do what you need to do, whether that's trade or whatever. And so that's something that I think needs to be worked on and solved
Yeah, yeah, that makes
much
sense.
better.
And like, because the activity and the transparency, like that doesn't necessarily need to be connected to a person per se, right? You don't, that isn't necessary, but the transparency that is happening on chain where we can see how these markets are functioning or how a smart contract works or where the liquidity is, those are the things that I think are quite powerful and what makes this technology quite interesting and novel, right? Because, like we were saying earlier here at the beginning of this, when I'm going to trade with my brokerage and I'm about to just put in even if it's a limit order or a market order, I don't have any, you may not have a whole lot of insight into where this liquidity is, how much is there, what kind of slippage you're going to end up with, and like, is this even getting delivered correctly, right? So I feel like when you have this on-chain transparency for all this, it's such a 10x experience all around. Even if people don't care, right? Some people just literally don't care about those things, but for those who do, I think that's very important and only benefits those everybody within the system.
Yeah, I think most people don't care or don't look at the raw data, and nor should they, but that raw data exists and people can visualize it and transform it into something meaningful for people to be able to trust in, and then they can verify that. And so, as long as you've got the right kind of people in checks and balances in place, you don't need everyone to kind of verify everything.
That's true. That's true. And then yeah, and by having the ability that it can be put into checks and balances, that also keeps like honest players and keeps people like keeps things a little more honest and fair too, right? Because they know if they start, you know, going the wrong direction here or start closing things up, people can expose that and point it out.
Yes. However, you don't want people on the other side of it being able to find things that they shouldn't be able to find and circumvent anonymity,
Hmm.
privacy, the put people at risk,
Right. Right.
which is again.
Yeah, I was
So
like pretty shocked with the whole French side of things there. Like, especially you were just mentioning this earlier here about, if you're in France, I mean, for those who are not aware or haven't heard, it was the Fran one of somebody within the French tax authority had leaked a bunch of, I guess, a list or a bunch of info of people who had reported taxes and their, the actual holdings, so large amounts of crypto that they had as holdings. So here you are as a tax abiding French citizen doing your duty. Hello, here is my proper reporting. Thank you. I have this and this. I have paid my taxes. I am being a good, upstanding citizen. And now you get punished because now you've got, I think there's over 70 attacks have happened. Something like ridiculous.
yeah, it's quite a high number
Like, un,
because of a government tax
yeah. And
personnel
and
leak.
here you are like giving out your personal data to the, who you thought was a trusted, you wouldn't think that like, oh, that, giving up, doing my taxes properly is going to put me at risk. Like, my God. So that's,
Yeah.
yeah, it also starts to create like a bit of, kind of questioning for a lot of, I think people with, even within our industry, like when you are reporting and doing things, should you be using kind of burner addresses for any of this stuff? So if somebody's going to find you, they're going to some sort of a post office box or something, or someplace where you're not live, like your residence, right? Like that starts to get to be a little bit concerning because, yeah, not only within within France, but like we've heard this all over, all over North America, and even locally here, there's been some incidents, which is quite shocking. But yeah, like when these mega lists can come out, like that's brutal.
Yes, it's not just even the government. Centralized exchanges pose the same
Yep.
risks. You're only as weak as your weakest link,
Yeah. Yeah.
as strong as your weakest
Yeah.
link. And so you only need to get into one person who has access, and then you've got access to everything and can put people at danger.
Yeah. No, that's true. Yeah,
Uh,
all this KYC stuff, like that's, you know, okay. So the KYC side of things too, you've got people thinking, okay, we got to prevent the terrorists from joining and yada yada yada. We need to have the KYC, but you look at something like Hyperliquid, where it's a decentralized exchange. We're saying we don't need to KYC you. We don't, you just can interact with this permissionlessly. That was also another big win for me too, right? Was that whole permissionless access to something, because having to KYC again is just, as we've talked about here, the larger we put we're just increasing the risk vector for KYC leaks, because it's going to happen. It's just going to happen no matter what. So being able to take one more risk off to give you that experience that you're looking for within a centralized exchange is just another big win.
it is, and it provides the same product that you would have had if you'd done KYC at these other platforms. The one thing that I think still lacks is fiat interoperability, on ramping and off ramping, being able to move funds from your bank account to be able to trade on these platforms. And it's worse in some geographies than others,
Are you,
but
are
it's
you,
still, yeah.
are you seeing any kind of solutions coming, or things that are going to make it easier?
I think there long term needs to be more adoption from maybe even central banks to be able to just directly hold cash on chain, in form that isn't wrapped by a custodial stablecoin issuer, right? I mean, will there be a day where Circle is no longer needed because the US government just issues dollars on chain and payroll runs on chain, and then you can essentially have your cash in a traditional bank account or on a new crypto bank account type concept?
And so then from there, you could say, all right, well, this is a whatever your JP Morgan bank account, right? Your JP Morgan crypto account. And that's where your stables are minted or created, or however they want to do it. And then you could then bridge them out, per se, let's call it, right? You bridge them out to Hyperliquid to go trading. At least they know where that's gone to. They know that it's been KYC'd within your bank. And you've already done that. And that's something that you're going to have to do, or at least the bank is going to know who you are. That goes out. Nobody needs to be able to connect. Now, I guess if they penetrate the bank, they could figure that out. But like that's just one less, need to go and KYC on all these third-party apps, right?
Yeah. And, that is kind of the direction of where CBDCs had some merits and still do. And there are definitely concerns in terms of, would that reduce privacy? Would that be seizable? People don't want to hold their assets in value, in a store of value, which could be seized at any given whim of a government. And then also, yeah, can we solve the privacy issues there? Because if I can trace Tangle's wallet back to him and know that he's spending this on certain services, right? Don't want me to go through your bank account transaction list and be able to read that. No one wants that. So there's still, again, like balancing privacy with the on-chain efficiency there. That's an issue. And so today you still have to be able to move from fiat to crypto in a way that is high friction with high fees. And I think that's been one of the biggest inhibitors to growth in the space.
Right. Do you see what you guys are doing with markets and how you're integrating it? I do like how you have a button that just says add cash rather than like, deposit or whatever, just add cash. I guess there's some approaches you guys are taking or thinking about there.
We're trying to make it as simple as possible and then tailor it to the individual. So when you go into one of our partners' platforms that help with the on-ramping, they're the ones that are at the end of the day you're interacting with and that you're passing your KYC details to if needed. We never see that data, and we actually never process funds. In fact, we're never in the flow of your funds. You store your assets in self-custody. You receive those assets from an on-ramper. And so we're partnering with multiple of those. And depending on where you say you are located and whichever you've interacted with in the past, we will direct you to the one that we think will give you the best fee or the best speed to receive your funds, etc. It's not though a problem we're trying to solve in general on and off ramping. I think there are many good teams working on that, but it's still a long way to go to be as seamless as just checking out when you're on Amazon or moving money from one bank account to another in the threat space.
Yeah, absolutely. Yeah, it is pretty easy when you can just, one click on Amazon and your thing shows up, and it just has your credit card baked in there. And I mean, a credit card obviously a different experience, that's versus like debiting account directly, but yeah, that
There,
UX is what's important.
there's that, and then when you sign up to Amazon, you don't have to send in your passport photo and a proof of address and fill out a questionnaire about how you earn money. Like that is something that comes under it's just financial regulation. Again, it's for the AML CTF side of thing. But I don't know that that should always be necessary or in the case of buying crypto, because essentially you're just moving one form of value to another form of value, and you're essentially purchasing, in most cases, a commodity, in some cases, a security. In which case, there may need to be differences around those. But tokenized securities, they're being treated differently by the SEC, I believe, or at least there's some indication that they will be treated differently.
Hmm.
So we'll see.
Yeah, okay. You're talking about different regions and different parts of the world here, and I know you were mentioning you're going to be kind of doing a bit of traveling here later on.
Yeah.
Yeah, is there any places in the world that you've got your eyes on that you would just like to travel and visit to?
Where would I like to travel to? Well, I told you I lived in China for about 5 years, and so we're gonna go back visit there, and just kind of experience living in different places in the world for a month at a time. It's something that I've always enjoyed doing, being immersed in different cultures and getting out into meeting new people. It's where we are right now. Sometimes it can feel like a bubble or kind of trapped, and when it's not the summer months, it can be a bit dreary. I think we're doing that. We're just getting out after the summer ends and kind of seeing the world a bit. Another place I'd love to go, we will go, is Costa Rica. Being down there and not spent too much time in that part of the world, so that's exciting for me.
Yeah, cool. Yeah, Costa Rica is seems cool. I've only been once. Yeah, I've been there a few years ago, but infrastructure in certain parts were seeming a little bit questionable. But I mean, a lot of that can be solved with Starlink and a generator.
Yeah,
But yeah,
I'm sure we'll have that, and with working online as we do 24/7, that can be a challenge, but
yeah.
sure we'll make it
Oh
work.
yeah, figure it out. It'll work. It'll work. There's also, I think, is it Bitcoin Beach that's down there? Or Bitcoin Jungle. Sorry, Bitcoin Jungle. I think is in Costa Rica there somewhere. So if you do have a chance while you're touring around, go see what they got going on there. I think you can spend some Sats at at a bunch of different places. So they have like a little circular economy for spending Bitcoin.
Okay, in the jungle.
Yeah, I can't remember where it is, but I think they call it. It's either Bitcoin Beach or Bitcoin Jungle. I'm failing this right now. I'd have to
We'll find
to
out.
find out what it is.
I'll check it out.
Yeah, but there's a number of spots that you can spend Bitcoin at, and they've got like a little circular economy going on there. But you will have to get onboarded with Lightning. So I don't know if you've journeyed in there too far, but
Oh yeah, I have. I think because I was managing the products around crypto custody, and we did a whole exploration of doing Lightning Network integrations for deposits, Binance US. It turns out to be quite a lot of work. It's very different from the other systems and networks we're integrated with. Uh, I'm definitely down to try that out and
Yeah, what
see
did
what
you,
the jump.
just a kind of a small aside here, very different from what we're talking about previously, but like even the Lightning Network, I'm curious, like you, because you literally got to see what it looked like to try and integrate with that, or I don't know, maybe it's at least see how far that went,
Yeah,
but
just in the way it works peer to peer and the way that it's not necessarily centralized onto a single ledger that you can reference at any point in time, it creates these risks with reconciling with an off-chain database. And so it's solvable, but quite a bit of engineering work to kind of get that synchronization going between the network and then whatever we would say on our backend, like you have deposited funds or you've withdrawn to this user on Lightning Network.
yeah.
And so
Yeah,
it's
that
not as easy
yeah, and that's
just
what
the
I've
EVM.
always kind of struggled with, I guess, on the Lightning Network was that the channel management, so like what you're kind of describing there is like, yeah, channel management. So you've got, somebody has a channel here, and then you guys have this massive channel with a lot of liquidity on it. And, the reconciliation, as you stated here, like how when you send your funds to this other area, and then what happens when like, or the other channel, and that channel has to close out and like reconcile on chain because it's either full or it needs to like increase that channel in the channel size, because it's not the global state. It's not where you can just have every other channel, like, or every other account knows about other accounts. And I mean, the engineering behind that just seems ridiculous. And I think what ends up, or what I believe ends up happening if they don't come up with better solutions, and they're trying in some other ways, but it just seems like it's going to end up being a few centralized services running Lightning. And that just ends up being banking again. So,
Yeah. I mean, I personally think it works well for what it's trying to be, but to try and integrate that into another system that's very different in cases where honestly there's not a ton of demand for centralized exchange deposits and withdrawals to from Lightning, not the Lightning Network, except for maybe Coinbase or some of the really big global ones where there is enough demand, and so it just becomes not worth it. And if that's the case, if your network isn't easy for other developers and platforms to adopt, to have that interoperability, that in itself is a disadvantage, right? Even all the EVM compatible chains are an advantage because if a platform integrates Ethereum, it's very easy to then say, okay, let's integrate Base, Arbitrum, and all of the other L2s. And Solana got to a point where there was enough adoption that it was worth integrating. Some of the chains have not, and so there's a trade-off to going in a different path with how interoperable your network or platform is.
yeah, that's a really good point, because yeah, there's so much infra that's built around EVM stuff, or EVM kind of accounts and everything, that it just makes it so much easier to, like you say, deploy the next one versus like a whole new engineering overhead team to, to like
Yeah,
bring all that in.
e- even Hyper EVM has seen a lag or kind of slow adoption throughout the industry because it's actually fundamentally quite different from regular EVM chains because of its interconnection with Hypercore. In fact, they can essentially run on the same state, and so that has been even in partners we've tried to talk to enable Hyper EVM. It was slower to do so, but Hyperliquid is grown now, and so there is more uh, appetite to integrate.
Yeah, that's true. No, it's a good point there with Hyper EVM, because yeah, I knew it's not, like it was a little bit slower than other places, and even seeing like USDC coming to Hyper EVM was way slower than we wanted it to be.
It was so slow, and then suddenly they're just wanting to jump on board and be the issuer, the
Yeah.
main
What do you think of that? How does
issuer.
that, I guess, how does that affect any design choices or builds, or just any comments on it?
Yeah, I can understand it. I think it perhaps is a deviation from the the values and the ethos that led to USDH coming about in the first place, which was to have something which is fully aligned with the kind of the Hyperliquid values. And I'm just gonna say that we we could talk about what those values mean, but they must have had really good conversations that led to this deal happening. And part of that might be just the revenue that comes into Hyperliquid and then thus buys back Hype. It might be because of the challenges of really getting USDH to that scale that it might need to be to kind of dethrone its incumbents. I think, from my side, we built with both, and so Dexari, you can trade with both. The markets exist. With markets, they had been deploying their markets against the USDH quote asset. And then now that's going to be sunset and switched over to USDC or whatever will happen. I'm not directly involved with that process. But in terms of our product build out, it actually changes some of the ways we're working with these markets in the app. Not to the extent that I think it will cause a problem, but it just, when you're building on top of a platform and Hyperliquid are quite under wraps with what they're doing, often or not, and you see that because the price suddenly moves when an announcement is made, which indicates that there's not a ton of insider knowledge being leaked out, which is great. But it makes it hard to build if you're building one thing and then on the following Monday there's an announcement which takes you in a completely different direction, because we're working in these development cycles, and it's sometimes hard to adapt to that. Although we have to do it. We have to be adaptive.
Right. Right. Yeah, that's a good point there. The amount of insider info that leaks out of Hyperliquid, I will say I'm very
100%.
impressed with how little does. You know.
Yeah, and sometimes people are pretty close to the individuals on that team and they talk to them regularly, and still they don't leak things. So I think that's pretty impressive and is a testament to the team that they built.
Yeah, a lot
Yeah.
of integrity there. I feel. I really feel
Yeah.
that. And even when Hyper EVM launched, that was just, oh, okay, it's like 11 o'clock at night, and okay, here's the announcement. Good luck, have fun. Wait, what? Like, where was the heads up? Where was the heads up, guys? Nothing. Just
Yeah.
okay, here it is, and no one was ready for it. But we knew it was coming, obviously, because there was all the testnet and everything. But yeah,
And I think that is, integrity is one of those values that they stick to, they adhere to, and that is important because it creates that trust, and it also reduces the insider knowledge that can create unfairness. Who wants unfairness? Yeah.
yeah,
Even if it creates a scramble at midnight on a
yeah,
weekend or whatever.
yeah. That's
It really does.
part of the trade-off for that. Yeah, yeah.
Yeah.
So you were mentioning Costa Rica. Anywhere else that you've got planned to go or want to see?
Yeah. Also, Australia, some family in South
Okay.
Africa.
Yeah.
We may try to do a safari if we can. That's
Yo.
something I've always dreamed of
Yeah.
doing. So
Please keep your hands and arms and limbs inside the inside the vehicle.
yeah.
Yeah, I've heard. Some,
Yeah, well, we're just gonna see. We're gonna get out there with Token 2049.
yeah.
That's in Singapore. That's gonna be the start of the trip, and a little bit mapped out. But we'll see how we feel.
Yeah.
And maybe there's some things that pull us, some events throughout the year that we'd like to attend.
Right.
I don't know if you've got your eye on anything besides Token in the next year or so.
Yeah. Token is the kind of bigger thing. Like I will be in New York for the HL Global event. I guess that one's in July. Then it'll be Token in Singapore, and then I'm not sure after that if we've got anything else. Yeah, I'll have to think. I'll have to think. But I do have a wedding in Mexico, which I've got planned for December. So I might do a little circuit around Mexico and see what's going on there.
Absolutely.
Yeah,
Yeah, I'd love to go down to Guadalajara and Mexico City
yeah.
and check out some more of the culture down there, and have some mezcal.
Ooh, mezcal. Yeah,
Yeah, you gotta do that.
yeah. Cool, cool. I've been kind of interested in some surf towns, is what I want to check out. So I know I've heard Puerto Escondido is a bit of a surf town, and would like to see what they got going on there. Plus, the other one I've kind of thought about was like Cabo, because the infrastructure is already there. It's direct flights, I'm pretty sure, from most international places, and it probably feels relatively westernized. So it's obviously a little late to the game on that one. I don't think that's an early adopter, but maybe that's like the right place to be because you've kind of got that mix of culture perhaps and infrastructure in place too.
Yeah, that could be good. PV as well, Puerto Vallarta.
Right. Uh, I
Yeah,
was there as a
I
kid,
think
and I don't know. I had to go up to Sayulita to go surf, so I was like, wasn't as bullish on PV versus other spots, but yeah,
Yeah, if you're gonna surf, that's a good place. I want to surf while I'm traveling
yeah.
too. It's something that I did a long time ago, but we're not blessed with the right kind of waves here
Not
or the weather.
really.
You know,
And like you gotta go way, it's like it's a mission to get there. It's like doesn't seem that far, but it ends up being like an 8 hour journey just to get there.
it is.
So
Have you tried wake surfing?
wake surfing, yeah, a couple of times. Yeah, a couple of times I
Okay,
have. I didn't get very good at it. Like, I mean, I can ride behind with like holding the rope and then like let go of the rope and got, I don't know. I
just
think I
lose
had
it.
like maybe a 30-second run was like the longest that I had. So a little different.
It's a
What's that?
it's good if you can get used to. I'm not the greatest, but when you do finally catch the wave and let go, it's a good rush.
Yeah, it is
Yeah,
pretty cool there. So, yeah, and you get like way more time on a wave, which is pretty rad. Because even like with the bit of wake surfing I did, like definitely riding without a rope way
hold it for a
longer
minute.
than any wave that
Yeah.
I've ever caught.
Oh, we should go out this summer.
Yeah, okay. Let's make that happen. That would be sick. That'd be sick. So, I'm also thinking about Japan for January.
Okay.
Yeah, that's
Skiing?
yeah, for snowboarding. Purely just to go and
Somewhat.
snowboard. Well, like I want to go for a longer stretch of time because last time was like a week and it was just push, push, push. Um, and just you end up going way too much. Or like you push yourself because you're like, well, I only have so much time.
You're gonna make the most of the trip. You're gonna ski every day.
Well, not,
Snow.
yeah, that's what you're trying to do there, right? So if I was to go for 3 weeks, like, okay, you can shred for a couple of days, take a rest, and then actually get some work done, and then, kind of do it a little more sporadic.
And then I'm then
So that's kind of the game plan. We'll see how that plays out. But yeah, Japan's been pretty, also like pretty surprising for me. I didn't think I would like Japan as much as I did, but it's a pretty cool place.
yeah, it's a great country. People are amazing. I went there in October. Tokyo for me was too touristy now. It felt like it overrun by tourists. And maybe next time I'll skip there. But we rented a car. We went and did a big loop of some of the cities. I think we probably drove 1,000 kilometers in total and just stopped. And it felt like the real Japan. There was so much kind of beautiful nature, the food. It's just a quieter pace of life as well. It was really nice.
Yeah. So in Japan, we've got like places like Kyoto. Have you been up there?
No, but I and then I had a friend who said it was very touristy in the temples and things, and so
Oh shit.
yep,
Okay.
right.
So it's kind of
Yeah, it
cooked
was
too.
beautiful. It retains a lot of the architecture because it didn't. A lot of the traditional architecture in Tokyo was lost during the war,
Hmm.
and Kyoto retains that,
Kyoto didn't lose that.
which is why I get so many visitors.
Yeah. Gotcha. Gotcha. Yeah. I don't know where else I'll be traveling this year, but yeah, I've got a few. I guess I got a few places that I'm headed to, but it won't be so global as you're kind of planning. So that's pretty sick. That's pretty sick.
Yeah, it's fine.
Yeah.
I'm sure I'll see you a couple stops along the way.
Yeah. Cool. I don't know, anything else that you want to talk about, share, or things that you're seeing here within the markets?
Things I'm seeing in the markets, well, we've talked enough about hype. It's at its all-time high. But yeah, no, as I said, I think the most exciting thing will be to see how these IPOs play out, the big events. And they could make or break kind of the broader adoption of hip free. And then yeah, I'm just really focused on our little neck of the woods, building the products that we're building and trying to find ways to get this more out into people's hands. Uh, so appreciate any feedback and support you can share along the way.
Yeah, absolutely, absolutely. Always happy to do it. I mean, you guys are building great product, and yeah, it's just so cool to see that synergy happening between you guys and markets because you guys have built great product. They're obviously bringing more product, and I mean, just doing it on the protocol that's offering a good product to begin with. So all of that coming together is just really beautiful to see. So I'm really excited for the direction of what you guys are building with markets and continue to build. Yeah, Hyperliquid.
Thanks, man. Appreciate it.
Yeah,
Appreciate the
absolutely.
time.
So, anyways, thanks a lot for coming on today. And if people are looking to find you, where's the best way?
Maybe you could share my X under the post. You can find me there. Always happy. DMs are open.
Perfect. Perfect. Alrighty, man. Okay. Thanks a lot.
Thanks, Tangle. Take care.